Hey guys, see the Matrix. We're talking about a very simple trading strategy from the real world from one of the stock professors who's made millions of dollars or over $1 million using his stock trading strategies. His One of his strategies revolves around trading very simple consolidation zones uh, based on long-term analysis. We'll be using either the weekly or the daily to define these strategies. However, of course, you can take them on lower time frames at your own risk. Be more volatile. The patterns tend to be more volatile on lower time frames, or less accurate is a better term for that. And yeah, so just longer term will be more steady for you. So that's what we'll be focusing on here. And one of the uh, zones for that box breakout strategy that he's using is a base block. So he describes the base block as the most powerful type of box that you can build, or that is formed on a chart, because it is the longest term of consolidation that you'll see, and that will generally just drive the longest and most powerful uptrend moves when price breaks out of that box in either direction. So uh, consolidation zones are areas where market gains power or steam, recollects steam, and once it breaks out of those zones, you can see good moves. And that's the whole idea of the strategy. So, first step is to be able to define the box. One of the other steps is, of course, to be able to find charts that have the potential to have these boxes, which I'll have a screener here that we can take a look at, which will have all the parameters you need to try and find these setups. So obviously here we've got a base block, if it wasn't clear already. It's defined by the 9 SMA and the 50 MA. Here you just use any moving averages, but the 9 and the 50 are the period that we're going to be using. So the 9 is more the signal, and the 50 is the longer term trends. So in this area, we've got 9 and 50 or have no clear direction. They're flats, essentially. That is why this is a base block, okay? Because there's no clear trends on the 9 or the 50, yet we're in a consolidating period. This is drawn out as a base block. And you can see one of the characteristics of base blocks is that they tend to produce false breakouts. So you got to be very careful if you're trading it, as this could have been easily misinterpreted as the breakouts. So could have this potentially, and whoops, and so could have this been perceived as a breakout to the downside, and of course this even looking more clear, we like downside breakouts. Eventually, price does make its way back up to the top side of the box and does show a clearly strong move to the top side, which does go ahead and break out to the upside in this very nice move. If you had captured that, you would have made 50% in 478 days. Okay, versus being in a consolidating zone, having capital in a consolidating zone that lasted over nearly 1,000 days long. So this is about timing the markets correctly using these consolidation zones. All right, and as a rule of thumb, trade base blocks with spots, as the time frame obviously is very long. You can see that it took, it was for over a year. Buying an option for an over a year length is very expensive, so might as well just do it on spot. Um, and the time frame for how long this plays out, you want to usually do it for as long as the box is. So that'd be 900 days here that this trade could play out for. So still some time, still some energy that could be shown from this. And yeah. So the next type of box is the, holy shit, my voice. The next type of box is the 50 EMA box. That's defined as a consolidation that lies above the 50 EMA. So you can see there was no clear trend before. Now there's a clear trend. So now we define this box here, this consolidating zone here. We can see that it's above the 50 EMA. It's consolidating above the 50 EMA. That, see, flat. 9 EMA is flat, and it's above the 50 EMA. So that is a 50 EMA box. And when a 50 EMA box breaks right around here, we can go ahead and we can take longs. So for 50 EMA box, you can take swing trade, so a swing long or a swing options longs, usually for multiple months. Again, based on the size of the box. See, the box is 50 days here. We want to take an option that would at least be 50 days in length. You see here that price does go up after the break of the box. It's probably best played out with what tool? Not sure. Just a long entry could be fine. Even though you won't be using stops if you're using an option. So you see that price makes a move up, and then we'd want to last in this trade for around 50 days, which would take us out near the highs here. It would have worked out nicely if you held for the whole 50 days. You would have been at one of the upper ranges here, which would have worked out pretty well. Of course, price did come back during that time, which would be a little scary. If you held out, you would have been okay, but yeah, it was not 100% strategy, but it is fairly high probability, and we'll have to see how it works out in reality. Although I'm just right now just kind of trusting this strategy, trusting what I've learned, and here we are. So this 50 EMA box is right after the base block, FYI. So there's a consideration between how close a 50 EMA box is between the base block and its potential for accuracy. So the closer it is, the better. So usually the first one is very accurate, very good at producing a move, and then the second one is not as strong. So try to find a second idea here, second consolidation. This right here is about a good consolidation. You can see that there's a flat zone here. There's some consolidation here. Let's see. If we draw this out, this is a valid zone. So this is valid. It does break out quicker than we expect, because we expect the 50 EMA to drive price up. Okay, so we're expecting the box breakout to happen when price reaches the 50 EMA. So the fact that price goes up before then is certainly bullish, but it happens quicker than we expect, and well, that's all you can say about it really. It just happened quicker than we anticipated, shortening the length of the box to 31 days in this case. And you check where price ends up in 30 days. And there. So overall, not too much of a high move there, but nonetheless, upwards movement is upwards movement. So the last type of box is the 9 EMA box, which is exactly a 50 EMA box, just using the 9 as the trends. So if we can find that here, let's see. Try to look for some consolidation zone above the 9, which is this yellow line. This is a kind of a good example here. It's kind of clearly consolidating. You can see that is 3 sideways candles here. At least 3 sideways candles is good. And yeah, we just put the box around those candles. Try to formulate it with the magnets. You can see that price ends up breaking out here, and it's more of a short-term play, be 10 days at most, which would take us, I don't know, but somewhere around up there. If you were to take this around 10 days expiration, the magnet is making it very hard, but we would have made a good amount of money on this simple 9-1, simple 9 box. Yeah. Although, you know, 9 SMA boxes, obviously more volatile. You're in a lower time frame, so you got to be more careful. So the next thing is to look at the screener. So this was just actually something I picked up from the screener today. Here are the conditions for the screener. You want to see that price is broken above the 9 SMA, and that price is above the 50 MA. This is something that will tell you that price is moving in a good direction. Get rid of that guy. And then also price being above 200 SMA is good. This price is looking very bullish with this overall indicators, right? It's above the 50, it's above the 200, and it's just across above the 9. Right here, we have the condensing strategy. This is the condensing part. This is what tells us price is consolidating. It's using the Bollinger Bands and the Keltner's channels. So I'm not really going to describe this because I'm not actually too familiar with these indicators and what this is, other than it's used to define that price is consolidating. And once you do that, you can take a look at the charts. You'll see here that there's a consolidation zone here. It's going to clearly define. This one's a 50 EMA type. See that price is above the 50 here, which is defined as a 50 EMA box. Let's see here, draw this box out. Consolidating zone. And we are right where we expect price to break out because price has reached and is supporting off the 50 EMA. So we're at the zone where we expect price to break. We had an alert at the top of the box, top of the range. It was formed in this zone. And when it triggers, we can go ahead and go long if we are still in agreement with the overall setup. So obviously you can use other indicators, charts to help you define what trades you actually want to take. So this is a decent looking one. I'm adding this one to my watch list. So I got a nice little section here. If you don't know how to add sections, you might have to pay, but you can go to the drop down here, hit add section, and define different sections here. So we got the box plays watch list here for me. So we'll be taking a look, seeing which ones are good here. So obviously we're above the 50 here, which is one of the conditions of this screener. We're also above 200. And we're just crossing above the 9. So is this a consolidating zone though? That's the question. Yeah, it's not really consolidation enough for me, more but just a trending environments for me to actually say that this is a consolidating zone. So I'm not going to be drawing any boxes around that trade here. I don't know what the heck that is. China. I might have to mess with these filters a little more. It's supposed to be the US markets, but maybe we have to filter it down even more. Wow, Dr. Pepper's down a lot today. Or what's that time frame? Oh, that's EPS. Interesting. So we sort of have the resemblance of a 50 EMA box forming. Price is supported off the 50 EMA. We got a consolidation zone. So this could be one that breaks out before the price gets bounces off the bottom range here. But we'll have to see. We'll set an alert here and we'll monitor this as well. See that this will be a pretty decent zone to zone trade here. Boom, boom. So we'll take a look when this breaks out, if it breaks out, what it looks like. Because it could go down. If it goes down before, well, it's not valid anymore. So you gotta watch out for that. You don't want to see it. You don't want to see it close below the 50 day or the 50 moving average, and then go above and hit your alerts. That would obviously mean that it took a lot longer and that it's no longer valid. So these are some of the trade ideas. This is actually one trade idea that I'm in at the current moment. YUMC, YUMC China Holdings. Just broke out the top of this box, this base box zone. So we'll see what happens from here. I did end up trying to take this on a more of a long-term option play, because we're just going to be a little more risky with it. See if we can get good gains within 130 days versus 170 days of the overall time frame. So we'll see what happens before this green line. My option is expiring, and hopefully it's all good. All right.